The brands have one thing that no financial B2C institution will ever have, which is emotional engagement of the buyer. Financial instruments is just a tool to realize on something that may be emotional to us. Financial product, by definition, apologies, and pardon my French, is not a sexy product. This is not how we see that.
Sure.
Fact, right?
Yeah.
And this is what I think we all need to realize being in financial services sector, that we don't have this naturally emotional engagement, except experiences that are driving negative emotion. That didn't work. Again, declined transaction, etc., etc.
Hello and welcome to 11FS Fintech Insider Spotlight, this week in partnership with Marqeta. I'm David Brear, CEO of 11FS. In this show, we shine a bit of a spotlight on the best and the brightest in the tech and financial services industry to get to know them, their businesses, and what they really think the future of the industry will look like. On today's Spotlight, I am delighted to be joined by Marcin Glogowski, who is the SVP, Managing Director, Europe, UK, CEO at Marqeta. That is a long title. You must have big cards. How are you doing today? Thanks for joining us.
I'm doing great, Dave, and thank you very much for the invite. I'm really happy and honored to be here together with you and the audience.
No problem at all. It's great to have you on. We caught up in Amsterdam recently. We're now in London. You were 3 weeks into your Marqeta career. How many weeks are you in now? Is it 7 or 8?
I actually stopped counting weeks.
Did you?
But honestly, it's like month 3 at the moment. So already counting months and hopefully very soon counting years.
Yeah. Well, tell us a little bit more about your background before we get into the report and everything. What led you to work at Marqeta?
Absolutely. Happy to share. So I think also reflecting for myself, I'm 25 years in business now, 20 years in or with financial services industry through consulting, banking, then through PayPal, closer to the payment side, and now with Marqeta. So I think that background on one hand helps me also to have sometimes a bit more philosophical view about how actually the industry kept changing, that in context also of technology. The other element, I think what brought me to Marqeta specifically is it's actually already scaled company, but still very hungry to grow. And that is very much refreshing. It is a perfect, for me at least, match of company that, again, is willing and making everything to grow and grow profitably. In the same time being quoted on the stock exchange, many companies lose their freedom to basically be very strategic. And Marqeta has a lot of this freedom coming from the executive team. So I think that all in all made a perfect sense and match, and I was only positively surprised after my decision.
That's good. It's nice when those things align, isn't it?
Absolutely.
And obviously, as you say, the US presence is significant in terms of the impact that Marqeta's had in the US, but also Europe and the UK is a big growth opportunity. So that's it's exciting to be at the helm of that.
Absolutely, and you are spot on. So it's true that basically both the history and also still majority of our volumes and numbers are coming from the US, but in Europe specifically, our growth is way faster than our growth in the US. So in US, we are growing fast, but here in Europe, we, for example, basically Q1 this year-on-year basis, we grew nearly 90%. So that basically indicates that even with basically our historical investments into Marqeta Europe, we are able to deliver very significant growth element towards the mothership, put it this way. But also recognizing that in the future of Marqeta to double down on our growth numbers, there is a big investment and willingness to bring more to Europe. Starting from, we opened our Warsaw office to put the foot in the ground in European Union. We have a number of product expansions, new features and functionalities coming this year to the effect. So bottom line, there is very strong and executive willingness to support Marqeta in Europe towards obviously bringing back more in terms of the business towards the total.
Yeah, it's amazing. Whenever you start a new job, there's always sort of there's the promise and then there's the reality. I mean, is the surprising thing? It sounds like that everything they said pre-interview was exactly what you manifested.
And even more.
Yeah.
And even more, I need to say. So I think that's maybe the first case in my life where I actually see, after a couple of, again, weeks, months, there is more to the promise
and
over the promise than I would ever expect.
Yeah, that's amazing.
It is.
For anybody who doesn't know, obviously, I mean, this goes out sort of globally, but for what is it that Marqeta are famed for in the US, and what is it that you're wanting to be famous for in the European market as
Absolutely. So in a very, very brief essence of it, I think Marqeta was founded back in 2010 in the US, primarily as and growing into the space of modern card issuing platform. And in the history, basically started working with the key modern players in, broadly speaking, embedded finance space, starting obviously in the US. So very early on, we started powering the solutions for example, Uber Eats or DoorDash, but then obviously bringing parts of our solutions to Europe. We also tapped on very interesting and successful players, primarily in the fintech space here. As an example, obviously, Sumeria by Lydia, Trade Republic in Germany, and historically many other customers that chose us to help them powering their card programs. And I think the future, both in the US and for ourselves here in Europe, is stepping into the broader definition of embedded finance.
Yeah. Okay. Well, maybe if we sort of switch gears and move to the research report, because obviously this is something we've covered a few times before.
Absolutely.
It's your first one, having been in the organization, but it's the fifth one that Marqeta have done. I mean, over that time period, the world has changed every year. So how does something like this come about in the organization?
The way I'm looking at the research is always very, very simple and down to the, let's say, the fundamental definitions of the economy, right? We do research and we want to do quality research towards primarily one fundamental reason. And the reason is, in our business, in any business, the majority of the value of building any strategy is coming from understanding the needs, and especially unsatisfied needs and the trends in those needs being developed. Then later on, we have obviously the other parts of the equation, like supply, the competition, et cetera, et cetera. But in the end of the day, what we do and what we aspire and want to do out and receive out of this research is understanding the trends of the consumers. In the end of the day, they are the ultimate decision maker. To build into that elements into our strategy, what are basically, hence, for example, technological solutions and technology solutions needed in the equation to satisfy those needs.
Yeah, it's an interesting approach, and obviously 11FS, you know, anybody watching this knows we put out loads of research, and actually some people believe, you know, you do strategy and you keep it secret, but the idea of good strategy, just because you know the answer doesn't mean you can execute it, right? Yep. So being transparent and putting these things out there, that's a different approach, isn't it?
It is, and I think it also shows that we rely not only on, in defining the strategy, on understanding the future, but in the belief of our ability to make it happen and action on it. And I think that we have proven over years that's actually our way.
It's interesting, isn't it? When reading through the report, there were some sort of key findings in here around, particularly for the UK, which, you know, obviously being based here, we see digitally is all around us. But the idea that the UK is leading against the US and Australia when it comes to digital adoption, do you think there's been any particular factors that have driven that, other than, you know, British people loving not to talk to people and just loving technology? Or is there something else in that?
Yeah, well, so the reasons behind are always the trickiest part of basically reading through the research numbers. So here, I think I'm much more on a speculative level, but you are very right. We see out of the report that, you know, for example, contactless payments and the usage of the contactless payments being in the UK 80% and above. What we see in the US is half of that. And when we look also in other factors of the current usage, pretty much there is this pattern of doubling down in the UK vis-a-vis the UK. On the other hand, if you look about, let's say, the plans and the willingness to use, for example, digital wallets in the context, it's coming very close. So my fundamental question, and I know this is not the answer, right? But question is it what we see about the current use, the factor of people willingness, or the supply side being able to effectively deliver towards the needs? And I'm reading it rather towards that direction. I think what is driving UK and Europe historically, I think this is very similar pattern, is it's a very active melting pot of various players. And this level of competition basically allows the best solutions coming to the market very, very fast. Hence, basically, that allows something to be adopted. So the adoption is much more the function of supply side rather than demand side. That's at least what I would see.
Yeah, it's an interesting one, isn't it? And every geo has a slightly different balancing act to that to a certain degree, doesn't it? One thing we've definitely found from a digital adoption perspective, hubs where you've got closed loop payment ecosystems always seem to be hotbeds for being a catapult into digital adoption. So the London Underground, contactless payments, Oyster cards, all that, they seem to be a kind of a leapfrog for getting people really comfortable with if I can pay for the tube, why can't I pay for my pint? So one thing that sort of stood out in a statistic that was probably a little bit less, the UK being a little bit less proud of was 76% of UK respondents are living paycheck to paycheck. That's a big problem. We're obviously in the UK, we've got various different issues with pension crises and saving structures. What do you think has led to that?
Can I be very philosophical about
Sure, let's do it. We're about 10 minutes in. Let's get really philosophical.
And I don't think UK is very specific in this very context. I think what we see over past decades is a fundamental aggregation of capital and wealth from and moving that majority of wealth and capital again to the, let's say, top 1, 5, 10%. In the same time, it's not only case of the UK but US to start with as well, that the purchasing power of majority of the people has decreased over time, right? So the challenge is actually fundamental, and I'm not sure if financial services as a sector are able to solve this equation. This is broader economical equation, but what, again, companies in our sector can do is basically do a bit of support in terms of matching the, let's say, the frequency of the payments vis-a-vis the frequency of receiving vis-a-vis frequency of spending, namely helping the equation of working capital in a form.
Yeah, it's an interesting balancing act, that, isn't it, in terms of getting that right for individuals and getting them to understand financial services as well to a certain degree. I wonder how many of those people within that 76%, the paycheck to paycheck, just are in a spiral of lack of understanding. There's lots of statistics out there around financial education being a big driver for it, but do you think there's something underlying to that? Is it, like you say, it's not necessarily a UK trend, but it's kind of a global trend, as you say, isn't it?
I think there is always this element of the equation for sure, and I think also what we see there are very successful companies supporting the consumer base in terms of financial planning. It means there is also a need for this element. I think second one, which is half of what we see as a base of people saying that they are living from paycheck to paycheck, half of this population is actually bridging that with a credit card. Yeah. Now, obviously, you can always ask whether the spend is needed, whether the spend is aspirational, et cetera, but fundamentally the issue is there.
Yeah. It's something that was covered as well, which is trust. Trust is it wrapped so heavily in financial services, and it's not really binary. It's a whole spectrum of what trust means in that regard. But were you surprised on that stat? There was one that said the UK customers, only 53% of them have actually switched banks in the last decade, despite all of the changes, despite 7-day switching processes. What's sort of driving that inertia?
Truth to be said, I wasn't surprised. I wasn't surprised. And the reason for that is, put aside this particular context for a second, but in the end of the day, in our decisions, your decision, my decisions, everyone's decisions, we're actually quite calculated. What I mean by that is we willingly take the effort if there is a benefit to us, whatever this benefit is and however this is defined, of taking the action, right? We don't like to do something that doesn't provide the value to us. In context of financial services, basically, why would I switch a bank? is there a significant stimulus for me to do so? If not, then what is the reason to take the effort? It's also not the simplest thing on earth to change the bank. I mean, there were mechanisms to make it easier with open banking APIs and PSD2, et cetera, but truth being said, it takes time. So it's the effort. And stimulus can be either coming from, there is a clear benefit in terms of, well, I'm getting, for example, way better mortgage offer, and then I need to move to the bank to get this offer. So yes, there is a price coming out of the effort. Or, and this is totally, let's say, unrational, there was some strong negative emotional situation that moved me basically to take the action. The trust element is pretty much something that, is very specific to financial services, right? I mean, if we're optimizing our cost to income, right, effort to benefit, in financial services, there is this element that, makes us a bit more a company than individual. What is the risk of the action taken? Is my money safe, right? So I think that's the element making financial services, broadly speaking, very, very special. But to me, what was striking in the research is that if we basically have the answers from the base, 40% of people are saying that they would be willing to switch to non-financial institution to get financial services, and only half of that is saying that they will switch to in a form neobank.
Yeah, that's amazing, isn't it?
It is.
Because actually then, trust is, reaching outside of financial services. I mean, big players have very trusted brands and, very great engagements with customers, brands that people love, right? So is that a much bigger threat than potentially the neobanks then?
I think it de facto is. And I think it's actually on the ball is in the hands of the brands to understand how big power they do have and what role they could be playing. And I think for broadly speaking, fintechs also understanding that sometimes the path to being successful is not necessarily becoming B2C brand per se, but actually powering the big brand having already built trust with their solutions towards their customer base.
Yeah. Is that where I guess more of the sort of embedded plays will come in then? Because, I mean, actually, taking financial services to where financial services problems are doesn't necessarily mean somebody needs to log onto a banking app to do that. It means doing it where it's most relevant to you, right?
Absolutely. And you were spot on. I think if we really try to visualize and put a vision behind the embedded finance, this is, I think, what many people are saying, that's really the vision of the embedded finance. And obviously there is a space for, let's say, very successful or very clearly defining the value and conveying this value message to the buyers willing to play directly B2C. But I think even from the perspective of, let's say, frequency of the interaction, right? The brands or the consumer platforms, they have sometimes daily, sometimes weekly interaction with their customer. And we go to financial institutions only at the moment of need. And this need is, well, put aside transactional, paying, for example, that is not even an interaction. I mean, from the data point, it's interaction, but from engagement of the customer, it's not. So brands are better equipped in terms of even, again, the frequency of the interaction. And in the same time, if you think about what brands are after today, especially the big brands, it's all about the customer lifetime value. How to make this not a single transaction in customer towards basically perpetuating towards basically indefinite period of time, increasing the frequency, increasing the size of the basket. So this creates an amazing space for how much value we are willing to invest from the margins we as brand are making towards defining what benefits and what value is delivered to the buyer to make it happen.
Yeah. And that's a different place to play, isn't it? Because,
yes.
I mean, if you think to your point earlier on, why do people switch? I mean, Bank A chucks you 100 quid to move to Bank B, and it's like, okay, well, that's great. But with big brands that are outside of financial services, like, I mean, the minute Nike makes a retail bank, I'm all in because, the types of things that they can reward you with are much beyond just monetary things. They are things with different perceived value, aren't they? Is that where, I guess, embedding financial services in a non-financial services brand, kind of, it's a force multiplier for everything in their balance sheet?
Absolutely. And I think what you mentioned before, The brands have one thing that no financial B2C institution will ever have, which is emotional engagement of the buyer. At least space for that and many engaged. I mean, did you ever, even from your own perspective, think, oh, I had such an amazing experience, or this credit card or this mortgage is such a great thing? Now, financial instruments is just a tool to realize on something that may be emotional to us. And brands have those power, they have this power, and banks and other financial institutions will never have. Financial product, by definition, apologies, and pardon my French, is not a sexy product. This is not how we see that. Fact, right? Yeah. And this is what I think we all need to realize being in financial services sector, that we don't have this naturally emotional engagement, except experiences that are driving negative emotion. That didn't work. Again, decline transaction, etc., etc.
Yeah, one bad experience overcomes, a lifetime of good ones, doesn't it? Unfortunately, it's those moments of truth, particularly in FS, isn't it? So, I mean, are there any other sort of examples that you can think of that where they can reward people in that sense? Because, I mean, again, retail brands, food stores, different things that you engage with, there are almost limitless potential at that stage in terms of engaging you with that brand in a more structured sense.
Right. So obviously what first comes to mind, and I think this is the basic also expectation of the buyer today, having that monetary benefit, right? But I think this expectation from the buyer or consumer is defined to this level as long as there is not a better, more sound overall value proposition. And I think what I find a bit tricky, and this may be making the journey in Europe a bit longer, is, well, the economies of card transaction in the US are providing enough of the value generated to fund significant or even total part of the benefit from the card transaction itself. In Europe, this is different. But in the same brands, if they realize that they can potentially apply a solid multiplier to their gross margins, thanks to that, the equation of the value is made totally different. But it's change of mind also towards the big brands, that they would need to sponsor that from their own margin rather than from the economies of card. It's a journey.
It is. But as you say, it's one that, if you get that right, the stickiness of those customers, the lifetime value of that in the round,
absolutely,
is huge, isn't it? And it's potentially even, I know we often say, Apple Pay is 2% of Apple's financial revenue, but in a world where you're Apple and it's that gigantic, 2% a lot. There are a lot of organizations that are non-financial services players who are making a lot of money out of financial services.
Absolutely,
right?
and that's a great example. And I think this is actually, those shining examples is something that companies in, for example, either FMCG or apparel can very much look up to and take as a learning, as a stimulus, as inspiration to redefine the way they are operating in the, let's say, in the world that we see very much changing.
Yeah, it's interesting. My mind's spinning out of all the different companies. Even the amount of trials and tribulations you go through with the sporting teams that you support. Imagine being able to bank with those people as well, and that contribute to, there's just huge amounts of opportunities if you get the trusted relationships really, really right. So
exactly.
I'm sure there's a lot of things that we haven't covered. We've covered a lot of different areas of what was covered in the research. Is there anything big that we've missed? Because I'm sure there must be a stat or something that jumped out at you where you're like, that was weird, or anything we missed.
Yeah, so actually, out of everything I read through the report and discussed, the fact, what we already, by the way, discussed, right? This very strong differentiation of, let's say, willingness to step into the new financial services relationship with a brand, non-financial services vis-a-vis financial services, that I think is the most striking to me. And there were other elements that obviously were but this is something that I think is very much defining the future, and the future very different from what we see still today.
Yeah, it is amazing one, isn't it? As you say, sort of so many iterations of research over the years, there's still so much changing. There's still so much happening in this space. It's once you think payments is done, you are very much wrong, aren't you, in that way? But what's the plan with the research then? Obviously, you pulled together a great research report. Getting people to see it, getting people to engage with it is always the next step in that. So what are your plans for it? And I presume there's going to be a 6th edition at some point as well.
obviously, I cannot say if basically everything is fixed for having a sixth edition, but I think first, we see a lot of value of this research starting from ourselves.
Yeah.
We see absolutely no problem to share this research, because this is also towards basically shaping not only the industry, direct industry, but also passing the message of where we believe that the future is towards the brands. It's part of basically making that happen.
Yeah.
Yeah.
I completely believe in that. Like I say, it's kind of our mantra at 11FS, really. If it's you create content that is good enough for you guys internally, and then put it out to people externally and see what happens as well. And like you say, if you can educate the industry, it's a pretty damn good place to be. So unfortunately, we are running out of time. We are going to have to kind of leave it at that point.
Sure.
But everybody, thank you so much for joining us on the show. And Marcin, thank you so much for joining me. Where can people learn a little bit more about you and obviously the research report as well? Where can they get their hands on it?
Absolutely. I think we'll be publishing the research on our pages, either on LinkedIn or on our webpage, or both. About myself, obviously, LinkedIn is and my profile. About Marqeta on our webpage, and also our LinkedIn, which is very active in terms of bringing the news to the market, sharing, etc., etc.
Fantastic. Well, we'll make sure that we stick the link to the report in the description of wherever you're listening to or wherever you're watching this. That is all the time that we have for you this week, unfortunately, though. Make sure that you follow 11FS on LinkedIn, Twitter, Instagram, TikTok, and stay up to date with all the cool stuff that we're up to. And if you enjoy this show, do subscribe to the 11FS YouTube channel, where you can catch up on all of the previous episodes as well. Have a great week, everybody. Goodbye.